Hello and welcome to the FinTech webinar, where today we'll be discussing the future of banking and in particular how businesses can grow their profitability and their customer franchise in the digital age. Joining me today is Martyn Atkinson from Metro, Tim Decker from Lloyds and David Harvey from Dell. Gentlemen, would you like to introduce yourself, and we'll start with Martyn.
Yeah, my name's Martyn Atkinson. I'm the Director of Change and Digital for Metro Bank. Been there about 5 months and really looking forward to today.
I'm Tim Decker. I work for Lloyds Bank in a global transaction banking business, and I'm the head of products for our electronic payments products.
I'm David Harvey. I'm a senior consultant within the banking and security practice of Dell Services.
Thank you. So let's start today talking about the customer experience, which is at the centre of the bank's strategy now. And in particular, let's look at how savvy customers are and whether that means they're also less or more loyal. Martyn, from Metro's perspective, would you like to kick off? And gentlemen, please chime in.
Yeah, absolutely. I think customer experience is going to become an increasingly differentiating factor within financial services. And I think that the customer base, not just within financial services, but more generally, are actually becoming a more demanding bunch. Mm-hmm. And from my perspective, I think that actually their expectations, their wants and their needs are actually being set in markets outside of financial services. And you see the Apples, you see the Googles, you see the Skys. These guys offer amazing digital experiences. They offer amazing personalised experiences. And I think historically, because of the way financial services were set up, that didn't necessarily drive a need within financial services. There were high benchmarks to actually entrance, and therefore in a way I felt that the industry become quite lazy. I think with the advent of fintechs and the advent of open banking and all the disruption that we're seeing, actually customers are now driving the agenda.
Yeah.
And historically it used to be the banks that would define the products that they would do, the banks would define the services that they would offer, the banks would define the channels with which they would deliver those services, and it was always on the bank's terms. And I think that we're at an inflection point now where actually the consumers are telling us, no, I want to engage when I want, with what service that I want, in a channel that's convenient for me. And almost they're starting to flip it round and put the challenge and onus rightly back onto the financial service institutions.
Buy something from Amazon in one click. Why can't I do the same with my bank? How have you found that at Lloyds?
Well, this is definitely the case. I like your point about things outside of banking driving change. So I think most consumers, individuals, they want things faster and they want more accuracy, and that's now seeing into my space in commercial banking. So probably 10, 15 years ago, customers were very happy with a 3-day clearing cycle. They managed their processes around it, but we are seeing an enormous growth in faster payments in the UK, so the UK Faster Payment Service. And the industry is responding to that around the world and introducing instant payment services in multiple geographies. So, and that is led by consumer demand. People do not accept that things are going to take 3 days. In a year and a half's time, we're going to see changes in the UK cheque clearing model, which will bring the settlement down to 2 days and will involve the digitisation of cheques.
So we still can't get rid of
them. We can't get rid of cheques, possibly. That's true, but they will become a much more efficient instrument. So I think this is, things are happening outside. It's driving retail customers, individuals, and then that's extending into the commercial side of the bank as well.
Absolutely. Anything you'd like to add to that, David?
Yes, there are now methodologies around how you actually measure customer experience and how you actually apply that. How you then apply that in defining your processes within the banks, both the consumer and the commercial banks. And then how are you going to actually deploy those processes across all the channels? So a lot of the focus now is on the mobile phone, but there's also the online banking, there are the branches, there's a telephone call centres, kiosks, and all of those things. How do you make it easy, simple, intuitive, and frictionless for the customer?
Indeed.
To start a process on one channel, pick it up in a second and complete it in a third. And where will the help be if you get stuck? Where will the automated chat pop up and suggest that you contact or tap on that and ask the bank to help you with a process?
And if we unpack that a little bit and look at what's happening in the middle and back office, I certainly hear, I'm sure you guys do as well, about the legacy systems of banks being the constraint. Sometimes also the skill sets as well, at an executive level down, not just in the frontline staff. What are your thoughts on the legacy systems, the skills within banks? Do you think that really is a constraint, or again, is it getting too much attention in conversation because it's probably the easy go-to question to ask? And if I could ask you to start with this, and then we'll take a bank's view.
I think it is a constraint. Certainly the very large tier one banks, a lot of them are still running on batch systems. They're not real time. They're not able to launch products within minutes. It takes typically around about 9 months to launch a new product. It is a real constraint. There are also the reliability of the systems, which the regulators are looking at as well. They've yet to actually address a lot of their legacy issues. You contrast that with the FinTechs, who are typically approaching the market in a much more simplistic way and using technology. But yes, it is a burden.
Arguably a simpler model from a
Yes.
blank canvas. Yeah, indeed. Tim, what do you feel about that? I mean, in Lloyds Banking Group, you've got a sprawling IT estate. I'm sure you've got lots of people maintaining that, effectively working very hard.
Yes.
Is it an unfair accusation to point to in-house skills and legacy systems being a constraint?
I just think it's a reality of any industry. If you're an established player, you're going to have a tremendous amount of infrastructure. If you look at real estate, Lloyds Bank has got an enormous amount of real estate, and that's a contrast with Metro Bank. So we have all this IT infrastructure. One thing is, over the years, it is very reliable, and that reliability is an important part of it, but that reliability comes at a cost. So if you need to make changes, the testing required to ensure the reliability is quite onerous. We are doing a tremendous amount of investment in new, not just front-end infrastructures, but also back-end infrastructures to address some of these things that you say about the speed to market, the ability to change things and so forth. And I think the biggest change that's probably happened in the last 15, maybe even 20 years is that most banks will not be building their own bespoke systems for payment processing, for all of the things associated with banking, the basic account structure, etc. The general model now is to go to one of the established vendors and then to integrate that into the estate, and that provides that flexibility and means that you're getting a system that is going to meet the demands of the future, which is the change, or the need to change, is only getting faster. So
I guess that can open up the question of, are you then outsourcing the accountability, the risk and the mitigation of that back-end system to the outsourced provider? But you're also outsourcing to them the opportunity to provide you with more up-to-date current feature sets. Correct?
Yeah, I think there's you talk about the skill set as well. You can't outsource the risk and you can't outsource the responsibility. So that's a big part of bringing a system into the estate. It does need to be very, very carefully managed. So you can't just buy something off the shelf, put it in a data center, and it's all up and running. There's a lot of work.
Absolutely.
And I don't think that's going to get any easier. There still needs to be a tremendous amount of expertise within the bank and our own staff to maintain those types of systems. But increasingly we are using outside providers for some of the development, the consultancy to advise on new systems and so forth.
These are complex businesses, aren't they? I mean, we talk about fintechs, and many fintech commentators talk about how slow banks are to react, but these are very large businesses, very complex businesses, and probably it's irresponsible to try to move too quickly sometimes and rush such complexity of change.
And we talk about fintechs as this is some new thing that has sprung up in the last few years. There are lots of companies that are very well established that are financial technology firms, Bottom Line Technologies, Gresham. There's loads of these, and they're very, very well established, successful companies. So a lot of possibly the startups are here today and maybe gone tomorrow. There's quite a turnover, I would suspect, in the brand new bright idea types of fintech companies.
Well, a lot of it
as there are
is
in lots of
experimental,
technology
isn't it?
startups.
One startup, if I can call them that, of course, is Metro, very much here. What's your view, Martyn, on the legacy skills and systems debate? Do you feel that that's something that Metro is liberated from? Do you feel that's something that you can relate to, but maybe not identify within Metro? And you know, how do you guys challenge yourselves not to become, you know, on the receiving end of that type of question in the future?
I think Tim raises an incredibly valid point, which is history will dictate that these big organisations have evolved over time. The technologies, the infrastructures that they've built have been right for the right time. I don't think anyone sat around this table probably would have predicted the urgency with which digital capabilities are being consumed by people within the industry. And therefore I think it's somewhat unfair sometimes on the big institutions that's levied at them that their infrastructures were built for the right time. I think what we have with people like Metro Bank is that we do have an opportunity, if you will, to maybe try and avoid that, because actually we're able to consider and preempt the challenges that some of our competitors have gone through. The approach that Metro Bank are taking at the moment is that the approach that Tim alluded to, which is we effectively go out, we define the capabilities we want, and we effectively go out and buy best of breed. So we'll look at if we want a new payment system, if we want a new digital asset, if we want a new originations platform, we'll actually go out, we'll use the Gartner Magic Quadrant, we'll use Forrester Research to define who is best in class. And therefore what we'll end up doing is building a capability ecosystem with the right architecture that hopefully preempts us being in a position where we have the legacy challenges. But even 6-7 years in from Metro Bank, I'm already seeing that there are examples already where actually if we don't self-correct, we could be in the same position in 3, 5, 7 years' time. Maybe not at the scale of a Lloyds or a Barclays, but actually you need to be really clear as you're actually going on that journey and keeping yourself honest, that actually if you don't make sure that you're assessing your infrastructure as you're making these decisions, that you could find yourself in a similar position.
An interesting term, the self-correct. It's great that you've seen this, because I guess, you know, given the size that you are and the pace that you're growing, where you feel you may need to self-correct, as you say, it's more manageable right now than, say, 10 years from now when you've got more of a sprawling estate and a larger customer base.
That's very true, and it comes back to Tim's point, which really resonated, is then you've got to make sure that you're safe and secure. You've got to make sure that when you do change, that you change it in a controlled way so that you have no impacts to your customers, to your colleagues, to the financial market at large. And I'm seeing the moments as we speak where we've got decisions that we've got to make, and you've got to balance that off with actually keeping pace with the Joneses. And on a daily basis, you've got all of these new fintechs, you've got all these new solutions, these new digital services, and you look at it and go, actually this would be absolutely amazing for our customer base. It would give us a USP, it would offer a new service, it would offer a new experience. But actually, is that more important than making sure that we don't end up with a legacy challenge in 10 years' time? And some of these are commercial decisions as much as they are actual customer experience decisions. And I think as an industry, we obsess, and rightly so. I think the culture's changing around customer experience and putting ourselves in the shoes of the customer. But actually, we're still financial organisations that have got a commercial model, and managing those things in parallel it's very tricky.
Yeah, I agree. I think, David, as well, one of the things that I'm always conscious of in this debate is the cost of maintaining those legacy systems in terms of real money and people that could be spent on other things. And again, that's another reason I think why incumbents, new entrants might want to consider software as a service, platform as a service alternatives. Do you have a view on that cost conundrum and how banks, big and small, you know, incumbent and new, are approaching that?
Absolutely. Yeah. The costs of the legacy systems are far too high, and that's reflected in the cost to income ratio, you know, the measure that the industry uses to measure its own efficiency. We're seeing banks still very much in the sort of 50 to 70% cost to income ratio, which means it costs you 50 pence to actually make £1 of revenue. That is far too high. And from my own experience going back, 7-10 years ago, I knew banks that had addressed their legacy challenges with new core engine replacements, and we're getting down towards the 25% mark, but offering full service, then very much the traditional channels. But in today's age now with the digital channels, I would suggest a retail bank needs to get its systems down towards the 12.5% mark. And that means taking advantage of the advances in technology. But all of this really is around putting the customer at the centre. This is what the fintechs are doing. This is what other digital providers are doing. They start with the customer first and then work backwards from there. What does the customer want from banking? And how then do you deliver what the customer is asking you for?
Yeah, I guess it's to Martyn's earlier point. We're all influenced by things we do outside of our banking relationship. In fact, some people would even pick me up on calling it a relationship. Is it transactions or is there a relationship there? I think there is. We've mentioned fintechs in this conversation a few times now. I'm very curious to know how, if you guys are working with the fintechs and why you might do that. Because, of course, there's opportunities there, but there's also threats. I'm going to start with you, Tim, and take the Lloyds perspective. Because I know there's a lot of activity at Lloyds in the innovation team through Claire Carmajan. But I wonder overall, how do you see the fintechs, and do you see them as something different to what we've seen before? Whether that's .coms or whether that's fintech before we called it fintech.
Well, I think it's definitely the partnership angle is there. The fintechs can provide innovative services, but in order to make that work, you still need a link into an account holding institution. You still need to be able to access the world payment systems, etc. So I think we still have a very important part to play, and I see it as being a partnership. We will partner with some of these fintechs, but they are also competitors for us. So in our retail space, we're investing heavily in new digital technologies. Some of those innovative ideas will be competing with fintech.
And do you see that competition being a head-on competition between the two entities, or is it more about picking away at your established model and cherry-picking what the fintech is very good at and challenge you at a product level?
Yeah, I think the biggest thing that's going to happen is the opening up of the banking marketplace. So the open banking that's happening in the UK and the PSD2 European legislation, because that is going to open up payment services and account services to fintech companies, to new competitors, and it's going to be a very exciting age. It's an opportunity, but it's also a threat to a traditional bank like ourselves.
It is. I think it's also somewhat confusing for some banks as well. I think in the UK, my prediction a while ago was we're probably about 2 years away from most banks being ready to release APIs. I'm not sure if that timeline still stands. I won't put you on the spot to answer for Lloyds.
No, the European Banking Authority will be releasing the high-level specifications for the APIs for PSD2, and I think the hope is that will be in line with the open banking in the UK. Regardless of the timelines, inevitably we will be exposing our services via APIs and making that available to new entrants to the payment space.
So you think the relationship with the fintechs could be one where you're challenged through an API economy post PSD2, but also maybe presented with some innovations that unlocks for you that potentially is a little bit harder to achieve.
It's equally an opportunity for us. So we would be able to develop services for our customers where we can instantly go and debit multiple accounts at different institutions. That's one of the things that the PSD2 will enable us to do.
Absolutely.
We're going to see a rise in aggregation services. So our electronic banking platforms, both for retail customers and for commercial customers, will evolve to be able to work in a true third-party model.
Right.
So most companies at the moment are multi-banked. I think we're going to see a lot more individuals multi-banked, but they will want to be able to see all of that in one place.
I agree. We're seeing signs of that already, aren't we?
Big growth in the account information service providers. There are in some countries that's already a big piece, but I think we're going to see a lot more of it.
David, what are your thoughts on the API economy and the relationship with fintechs?
I think the API economy is a very positive thing. This is where you can actually partner, collaborate with somebody else to provide a service that maybe you can't do as well as they can. And in fact, if you take a step back and look at what the fintechs themselves are actually doing, so they are doing things that the banks don't want to do. So you look at crowdfunding, those sorts of things, funding circle. They're doing things that the banks don't do well or don't do as efficiently as they can do. Somebody like TransferWise with their cross-border payments capability. or they're doing things in competition like PayPal, classic sort of fintech in many ways, or they're doing something completely different. And the banks can learn from that about what they're doing. And typically the fintechs are taking one product or service, and they're really focusing very heavily on that. And they start again with the customer. What does the customer want from this process or this service? And then they're defining their processes and how they deliver that product or services in a way that makes it attractive into the marketplace.
Indeed. Martyn, I'm curious what Metro are doing. Do you have a fintech collaboration agenda? Do you have an investment pot here where you may procure particular innovations, or maybe a fintech company to accelerate your transformation? Or do you feel you're doing quite all right on your own?
So I think it's probably a hybrid of all of those things. I think to Tim's point, for me, fintech's a little bit emperor's new clothes. There's always been organisations since the day dot that are providing innovative financial technologies. I think we've now got a buzzword that we use that we start to try and differentiate organisations by. And I actually think that there's been a maturing of thinking within the industry, which was maybe a couple of years ago. Some of the financial service organisations were looking upon the fintechs as complete competitors, very threatening, and therefore there was almost a parental relationship. There's quite defensive behaviours on both sides. I think with the opening up of APIs with PSD2, I think that a lot of the banks now are starting to think, actually, let's start to play to our own strengths. Our strengths being that we have scale, we have customer reach, we have stability, we have trust, but also mature enough to appreciate that there are things that actually we don't want to do, we're maybe not as good at. And I can see much more in the collaborative partnership sense, almost like a relationship of symbiosis, where the fintechs get income, they get a little bit of scale, and we start to be able to create some of the differentiation. From a Metro Bank perspective, a lot of what we're thinking about is going to be couched within our response to PSD2. I think we would be absolutely naive to think that we'd be able to deliver all of the digital services, despite the fact that we don't maybe unencumbered by some of our technology challenges, and we could do it all of ourselves. And therefore, our response is likely going to be about defining what are the services that our customers want, what are the experiences that they want, and then being really mature to understand what capabilities will we be able to do that ourselves. And actually, we think that we've got both the skill sets, the beliefs, and the ability to design those amazing experiences, versus those that actually we can go and buy through a fintech. So I think we'll end up doing a bit of a Chinese pick and mix, if you will, Chinese menu pick and mix. Well, there'll be some things that we'll absolutely do and centre ourselves, and there'll be some that we'll partner with.
It sounds a very sensible approach to me. We've talked a lot about PSD2 there, and one of the things that we haven't yet touched upon, of course, is the risks for the consumer, the liability issue. I've had quite a few conversations about where liability sits in the event that there is a fraudulent, incorrect, maybe transaction. Should that be with the banks? Should that be with the merchant? I've read recently in the Financial Times that would potentially be with the consumer, which is quite a change. So there are some risks in this. It's not all good news. And in particular, there are some risks emerging as a possibility for the consumer that previously may not have been the case. What are your thoughts on that in terms of an institution with the heritage and the know-how and the banking experience that Lloyds has about trying to educate customers to understand these risks and indeed find a solution that you feel is fair and equitable for all parties? Because today, of course, the bank carries the majority of that liability, but in a post-PSD2 world, maybe that's not the fair answer.
So PSD1 actually made things a lot better for the consumer in terms of, if there was an unauthorised transaction, it made the banks responsible for reimbursing the customer, much quicker timescales, etc. So there's been a general moving around in the regulations to protect the customer. I think that's the best thing. If our byword is the best bank for customers, then doing something that disadvantages the customers is not in our interests. So I think it's a misstatement to think that there's going to be a shift of responsibility towards the customers. But as you say, I think there is a real need to educate customers, and you see lots of attempts to do that, because if a customer is grossly negligent, was there an opportunity to have prevented that through education and so forth? So I think there does need to be
Yeah.
a lot more.
It does feel
onus
like
on
one
them.
of the biggest changes in banking for many,
Yeah.
many years, decades,
Yeah.
that consumers probably are very unaware of.
Yes.
And actually, when you try to explain it to them, and we use the terms that we do, in the banking industry, it's going to turn them off anyway. So, there's a customer communication piece there to make them want to engage and understand, and then to be able to understand.
Yeah.
I wonder with Metro's expertise in being very, very customer focused and friendly, to the point as we were discussing earlier, where customers are welcomed into your stores with their pets and well looked after, bicycles as well. If someone like Metro was able to do this in the right language and tone of voice, I'm sure we will all be attempting to do this. But what would be the Metro take on trying to get customers to understand what PSD2 may mean?
I think it's a very interesting question, and I think actually your question highlights a wider macro point, excuse me, which is there's still a lot of ambiguity around PSD2. Whilst a lot of us talk quite openly about it and the opportunities and the challenges in security and authentication, actually we're still waiting for information that would actually allow us to formally settle on some of our responses. And from a Metro Bank perspective, it's really key for us that we actually educate our customer through this process. We need to explain to them in very simplistic language what it means now when actually they're going to be on a merchant's website. We can't talk in the language of an AISP or a PSP. We need to talk to them about effectively security, confirmation of payment authorization, who is party to that end-to-end process. But we need to do so in a way that's couched within actually what is Metro Bank's response. And at the moment, I don't think as an industry people have really settled, particularly maybe some of the bigger players, on are they going to become an account aggregator? What is their strategic response to say, do they want that disintermediation? Do they feel that they've got an empathy and an engagement with their customers that means if someone sits in between that transaction, that ultimately the relationship still remains with the bank rather than with the PSP or the AISP?
Yeah.
There we go again.
I think there's going to be a big another issue that hasn't been resolved is the liability and responsibility for these AISPs and payment initiation
We're going
providers.
to use the acronyms, guys. We need an acronym bust.
Payment initiators and account information service providers. That's the AISP and payment initiation service providers.
Indeed.
What I think this does
Yeah.
highlight really acutely is, and this is where I think some of the fintechs can really help, is authentication. And I think, to quote your term before, this frictionless movement and this frictionless transition between channels is how do we do that? How do we do that as an industry? How do you do that as an individual? And also, to your point, where does that liability sit?
Yeah.
So is it upon the organisations that are going to do the account aggregation or instruct the payment, or is it down to the bank? And ultimately, and I think it completely resonates with what you said, David, what's the best customer experience? Yes, we need to understand where liability sits, but you want to make this as easy and as frictionless and as intuitive, but it needs to be done in a really safe and secure way so that actually our customers, whether they're with Metro Bank, whether they're with Lloyds, actually embrace this. Because if this is done well and it's well thought through, the whole intent and purpose behind this is to create innovation, is to create transparency, it's to put the customer at the heart. And I suppose there's always a risk with this that we neglect that and we actually lose sight of the fact that the reason for doing this is to open up transparency, to open up opportunities, and to put the customer back in the driving seat of building brilliant services. And I actually think the regulator needs to help us in some of that stuff.
So we've talked quite a lot about the customer experience. We've touched on regulation there. One thing we haven't touched on yet in the discussion is blockchain. And of course, it's the conversation that a lot of people are having, bank or fintech. Some people say it's overhyped. Some people say it's an emerging technology. Lots of sensible use cases being tested. What are your thoughts, Tim, in terms of an institution like Lloyds leveraging the blockchain? Where would they see value and what sort of time horizon would you expect that value to emerge?
This is, I think there was a question was posed, is this the threat? Is this the thing that's going to, dramatically change banking? Is it going to put us out of business? I think that's, I'd like to address that question first, because I don't think it will. I think when you talk about this is a new technology, a new opportunity, it's an opportunity to do things more quickly in a different way. I think it does have some particular areas that this could be used in. We're starting to see some experiments. We were talking prior to this about in the securities industry around tracking trades, tracking settlement, etc.
Mm.
There are some interesting developments in the payment space, and SWIFT, our member cooperative that is used for international payments, is definitely looking at distributed ledger technologies. I was at a presentation from them last week, and they made the point that this was a very interesting technology. Some of the things that we already do in the SWIFT space around sharing information to multiple banks at the same time,
Mm-hmm.
moving things very quickly, very securely, is that technology of distributed ledger is definitely going to add some value in there. But I think it's going to be a longer term before
Over
we
the
really
longer term,
see
yeah.
something that, I don't think something's going to suddenly emerge that just dramatically changes things overnight. I don't see that happening.
Yeah, and David, are there particular use cases that you're aware of that you feel are emerging maybe in the more immediate instance, or do you feel it's a longer term plan of experimentation?
I actually feel it's happening today. It's happening now. So we're seeing, for example, Santander have announced publicly that they're trialling a cross-currency, cross-border payment,
Mhm.
and they're testing it with their own internal staff first. So that's happening today. We're seeing other FinTech providers such as Settle,
Mhm.
who have developed a capability now, their own proprietary ledger, to actually address the challenges of the settlement, the post-trade settlement industry and payments. So they have going to market with it today. They're having conversations with a number of suppliers, and it's a very exciting new technology. And if you boil it down, what it delivers really is trust. The data on the distributed ledger on the blockchain can be trusted, and then how can that actually impact, simplify, speed up what is happening today in the processes within the banks.
Mhm.
The other key thing about blockchain technology is that somebody else can use this to actually take or target parts of your business which are not inefficient at the moment and do it themselves. So I see it as being both very exciting and a real threat to the banking industry as well. The banks themselves, though, are actively looking at this technology. They have their innovation departments, the tier one banks, looking at the technology. So they're at the cutting edge as well, and it is an emerging technology, and it is maturing, but things are accelerating very quickly now.
Yeah, they are indeed, and you mentioned the opportunities in there as well as the threats, which I think people are still trying to understand, of course. I'm curious, Martyn, what an organisation like Metro thinks of blockchain. Is this a threat? Is this a big cost-saving opportunity, or is it something out in the distance that you'll get to in due course?
I think, like with anything else, you need to face into the emerging technologies and treat them on their merits. I mean, we were chatting earlier. I remember the tabloid headline 20 years ago, WWW, what's that all about? And I think there's an element of that with blockchain, because I think it is an incredibly nascent technology. It needs to go through a period of evolution. But to David's point, I think there will be absolutely some unintelligible and very clear use cases. I think from a Metro Bank perspective, we'd be looking at it to understand what are the business challenges that it would solve. Is it about reducing cost? Is it about improving processing? Is there going to be a customer experience angle to this? Because I think a lot of the debates that are had out at an industry level at the moment talk about the support that it can help our regulators because of its immutable nature, so real time we can be exposing the information to the regulators. I think where Metro would come from it is, what's the business problem that we'd use it to solve? Because I think there's always a risk with new technologies that you use technology to effectively answer a question that you didn't quite know that you're asking, and we just need to be quite guarded against that.
Yeah, which is the common thread that I think most of us have heard when we talk about blockchain. But it does offer potential, of course, and that is being utilised today, as you said, David, whether that's just smart contracting or otherwise, payments. But I think the real opportunity, of course, is in the middle and the back office, and that's where the big investment in proof of concepts is being made now. Lots of funds starting up, lots of investment banks, seeing executives quit their high-profile jobs to fund these experiments. In terms of the blockchain's potential 8-12 years from now, I'm trying to understand if there's a consensus here. Do we feel this really is the game changer that's promised now, or the new internet in terms of the disruption, or is this something that may be overhyped? What do you think?
I would reflect back to the point I made at the beginning about the need for us to do things much faster and more accurately, If we looked at cross-border payments, if you make a cross-border payment today to certain geographies, it can take a number of days. You may not know exactly how long it's going to take. You won't necessarily know exactly how much it's going to cost. You won't have certainty that the beneficiary has received their funds. That's not the case in every cross-border payments, and there are some FinTech companies that were mentioned, TransferWise, TransferGo, as some examples that are starting to address that. The banking community is looking at that and has recognised the need to improve this and speed those processes up and add more certainty around charges and delivery and so forth. If blockchain meets a customer need, and there's definitely a customer need to improve that cross-border banking, cross-border payments business, if blockchain provides a way of doing that much more effectively, efficiently, then that would be the chosen technology. But if it doesn't add something over and above the existing network that we have of correspondent banking around the world, I don't think it will replace it.
A very sensible perspective, I think.
Yeah.
Indeed.
What's interesting, it is a new technology, but if you think also of other new technologies, if you combine Internet of Things with blockchain, and particularly a subset of Internet of Things, Internet of Moving Things, suddenly you have a mechanism of being able to pay devices with a cryptocurrency. So imagine a 40-foot shipping container booking its own passage around the world, booking what's the right road haulage, arranging its own insurance. What will that do to trade finance?
Yeah.
Something that has worked very well, it's worked for hundreds of years, trade finance, but it's a very, very complex process. So what the technology also allows you to do is create different business models or extend existing ones into new areas that just weren't possible before.
Yeah, I agree.
That's one of the exciting aspects of blockchain technology that the fintechs are picking up on, other people are picking up on.
Yeah, and sometimes often missed in the broader context of what the blockchain means for banks. The Internet of Things conversation, I think, is often missed there. I'm going to move us on to a threat that I think is often discussed and certainly with us in the here and now, but which also presents opportunity, and we've certainly seen that, which is Facebook, Google, Apple, and of course the innovation that they bring. So when we talk about FinTech, I mean, that's big tech FinTech, and it has been very disruptive. We've seen a number of banks partnering with these technology companies to release new payment methods. We will see more use of data. I think we're also seeing Amazon creeping in now, offering services to banks, even if it's just hosting. What are your thoughts on these established technology firms? How disruptive do you think they have been, will be? And in particular, where is the role of an Amazon or an Apple in terms of the bank's ongoing business model? Martyn, would you care to share a view?
Yeah, I think it's a very interesting question. There's lots of debate within social media forums, within FinTech circles, talking about the tech titans. Will they ever open a bank? And there was a very interesting survey done recently where I think there was a startling quote that 73% of people, young millennials, would actually trust a Google, a Facebook to actually open a bank. And you see that stat on one side, and then yet you see with things like the current account switching service, my perspective is there's still a lot of inertia. And whilst these guys can absolutely provide compelling retail experiences, quid pro quo, can they still provide really compelling financial digital experiences? And I still think to a degree, outside of some of the elements of disruption, that's still likely to be proven. Where I think they will play is where they can offer value. So you talk about Apple Pay. That is a fantastic experience for our customers. You know, the fact that you can effectively take out your phone, you've got a wallet sat within your phone. So I suppose my perspective is probably similar to the FinTech position, which is where they're able to provide something that enhances the experience, it enhances the relationship. I can absolutely see a role being played. Could I sit here and see an Apple bank in 10, 15 years' time? I think intellectually, yes, because they're an amazing tech titan, they've got an incredible brand, but it still comes back down to consumers. And at the moment, you know, history dictates that consumers are a very inert bunch. They don't necessarily move. I've still got my bank account from when I went to university 18 years ago. You know, we talk about disruption, we talk about people disintermediating, but we forget that actually behaviour will dictate what people do. And I suppose I'm at the moment politely sceptical as to whether there is this kind of rush to adopt maybe some of the debate that we have at an industry level.
Right, so possibly more of a re-architecting of the industry rather than a disruption. What are your thoughts, Tim? Do you agree?
I'm not. I think we're seeing. We've already talked about different companies playing to their strengths, and we talked about the fact that banks are using technology providers to provide their architecture and their underlying systems. I think if you looked at this, it's the same thing. Would it really be a core strength of Facebook or Apple or Google to open and to become a bank? I don't think it's their core strength, but the opportunities that we've talked about with open banking, with PSD2, the API economy, I think they've got some very innovative parts to play in presenting the information of people's accounts and their various financial products that they have across a multitude of organisations.
Yeah.
So I don't think that they would become a bank per se, but I think we will start to see some really clever aggregation services that presented through a very innovative interface,
Right.
and the ability to move funds very seamlessly from a mobile application from someone's Metro account to their Lloyds account, or vice versa.
Right. And do you agree, David? More?
Yes, I mean, the question's asked, what would they be like if they became banks? It's just not in their DNA.
Yeah.
That's not what they want to do. They don't want to be applying the amount of capital that's now required to support a bank, the compliance challenges, the PSD2 initiatives. But I can see them getting involved in certain processes. So we talked, the example of a 40-foot shipping container. Look at Amazon and what they do in terms of distributing products. Would they want to get involved in trade finance? Look at Facebook, that's got billions of customers, something the other fintechs don't have. What could they do for their customers? They're already doing things around payments. So I could see them cherry-picking areas of banking and doing it incredibly well. So would they be banks? Probably not. Could they affect banking? Yes, I think they absolutely could.
Yeah, absolutely. You mentioned Facebook there. I want to get an opinion on the role of social media, if any, in banking. We're all, I think, seeing experiments here. Some people are moving faster than others in terms of their offering. But what do we think? Is there a role for social media in banking, or are we kidding ourselves here? And if there is, specifically, what do we think those challenges are? And Martyn, I'm just going to ask for your view first.
Yeah, it's an incredibly interesting question. I actually tie them together in terms of consumer behaviour. Is it social media per se that's actually driving a change or a perception of change, or is it actually where our consumers interact and engage? We live in a world now where everyone is digitally connected. We have people that literally sit on social platforms. And so for me, historically, social media was probably just seen as a marketing channel, a way to grow your brand, the awareness of your products and your services. And literally it would probably add into your email coverage campaign, your physical mailing that you add into statements. So it's almost seen as a marketing monoline channel. I think to Tim's point, what we're seeing now is actually social media being seen as a platform. And actually, if these social media platforms can start to intersect and interconnect and stitch together a financial service experience, then that's where I think they could be disruptive. We've seen recently this week the first time that people have actually been able to buy shares on Facebook. And I can understand where if people are literally living on social media platforms, how do you then intersect that into your financial banking experience? And I think the banks need to consider how they adopt and adapt and collaborate rather than seeing it as being quite a defensive strategy. It also opens up for me an opportunity to actually get better experiences back to the customer. You think about how you actually have customer service, your old channels where you actually phone someone up. Years ago, if you actually wanted a response from a bank, you'd probably write a secure email that would take an SLA of 3 to 5 days. People just won't accept that now. And I don't think that's disruption. I think that's just consumers' expectations. If they engage with an organisation, they want a real-time response. So actually, social media can not just help in terms of your account servicing and connecting together your experiences, but I actually think it forces banks to be more real time, and you see that with some of the Twitter feeds, you see that with some of the Twitter responses. I know Nationwide was the first organisation that had a 24/7 Twitter. I mean, who would have thought that 5 years ago, that you've got someone actually overseeing a social media platform to understand the nationwide view and what's happening. And I think it's actually how people live their lives that's driving how financial service organisations will need to respond.
Indeed. And you agree, Tim? This is a way to open up the bank and communicate in a different way?
Absolutely. I think it's just utilising some of the things that banks have traditionally done, like making payments, arranging loans, all of those types of things that banks traditionally do. Lloyds, for instance, has always provided very good community bank accounts for clubs and societies. Now, it's interesting that clubs and societies are moving online. I'm a member of a few cycling clubs and things like this, and they've all got an online presence now. But off the back of that online presence, there's a need for people to make payments to each other. If they're going away on a trip together, they want to share expenses and things like this. So I think we're going to see some of those things that people do happening within those social media platforms. So payments is definitely one thing. We've seen quite a rise in crowdfunding, that type of thing, I think, for ideas and innovations. It used to be very difficult for people with an idea to get funding now. If you've got a good idea and you present it on social media, people can get funding for a project literally within hours if it's good.
So it sounds very positive. And one thing I just want to ask you, David, in amongst that positivity, what are the challenges that you see?
I think the biggest challenge is for the banks to actually embrace social media. At the moment, what they're tending to do, what we're seeing, is that they're tending to find out how is their brand perceived, and looking for complaints and problems. And if you're listening to that with the technology that you have, that is all you hear about. Whereas I believe it's actually essential that you have a social media presence. So my generation, when we opened our bank accounts, we asked our parents, or our parents arranged a meeting with their branch manager. Roll forward to today, and the millennials, they're asking each other, who's the best bank to deal with? Who's the coolest bank? So what do you find is some of the very solid traditional banks are not even being thought of because they're just not cool. So how then do you reach them? Well, you have to reach out to them, and social media is one way of doing that. So you need a social media presence, you need a social media identity, and you need social media as part of your customer engagement strategy, a new channel to be able to share the bank's point of view and reach out and become relevant to the younger generation.
Yeah, absolutely.
I think, to your point, David, I think it allows a two-way conversation.
It does.
Because what it allows people to do now is quite often people have been able to use social media to vent and vex and talk about things that aren't right. But actually, if it's corralled and you look at what Fido does, you can actually end up having a genuine community bank where actually online people are able to offer up opportunities and say to the banks, well, have you considered this product? Have you considered this service? There's a gap in the market for X. And actually, again, it's the consumers that are driving the agenda. And actually, we can be really defensive and put our hands up and go, no, we know exactly what you want as consumers. Or to your point, you can embrace it. And you can use that to your advantage then to think about actually creating consumer experiences that are driven by the consumer for the consumer. And it almost removes that kind of ivory tower concept that banks do to the consumers rather than actually, to your early point, it being a relationship.
Yeah. Interesting word there, embrace social media. I think that's probably the word that sums up most of our conversation today, embracing the future of banking through partnerships, through substituting where you may have a lack of skill in-house or technical capability with external offerings, and of course opening up to nascent technologies, whether that's blockchain or something on the doorstep here and now from an Apple or a Google. I want to thank all of you for joining today. I think we had a very good conversation.
Thank you.
And of course to thank everyone that decided to join us at the FSTech webinar. Thank you.
Thank you.
Hi, it's Gabriel Swift here. I'm Senior Marketing Advisor at Dell Services. I just wanted to thank the panelists for today's session. And as part of the final wrap-up, we have some further questions. And I, before doing so, wanted to introduce a colleague of ours who is involved in as a Senior Enterprise Architect for the banking practice. He is Rakesh Pasay. So warm welcome to Rakesh. He'd like to have him today. He can provide some further insights into what customers are seeing, what he's seeing in customers, I beg your pardon. So Without further ado, the first of the questions that we have is, what are the new technologies that banks should consider in order to stay competitive? That's a question to David.
Thank you, Gabriel. Yes, I refer to what I actually call old new technologies, so the social, mobile, analytics and cloud. Now they, between them, have been around for about 10 years now, but still the uptake within the banks is not as high as I would have expected by now. So those still need to be embraced and taken advantage of. But it's the new technologies like blockchain, Internet of Things, biometrics, security enablement, robotics, replacing people with automated full-time employees instead, or replacing or doing very repetitive manual tasks using robotics. And also things like touchless authentication and voice enablement. You'll be able to talk to your device, whatever it may be, a laptop, a mobile phone, a tablet, and command it to do whatever you need to do. These are new technologies that will help the customers and help the bank itself. And what's making it a lot easier, of course, is the fact that today there are now toolkits and packaged solutions from the solution providers, software and platforms as a service, and whole lines of business as a service as well. So it's easier today to take advantage or let's say launch a new bank than it was when I last did it some 16 years ago. So those are the advances in technology that everybody can take advantage of, and which particularly, as we mentioned in the webinar, the FinTechs, the new players, are taking advantage of.
Great. I'd like to also pass the same question to Rakesh. What do you consider to be the new technologies that banks are considering at the moment?
Yeah, so if you look at the digital banks today, they are trying to offer the best of both the worlds, right? There's an increased focus on new customer experience. There's an increased focus on efficiency for their customers, improving the quality of interactions, ensuring that there is fast and secure processing. There's a wide spectrum of products. They're looking at integrated IT infrastructure, and of course, lean, optimized channels for their customers. All these points have a significant bearing on the landscape, the technology landscape of organizations. As an example, if you look at the core banking system, most organizations today have monolithic applications, but because of the change in technology, they're moving towards more componentized based architecture with the introduction of microservices. They're looking at the possibility of introducing modularity, extendability, and integrity into their systems.
Great, thank you. And our next question is, again for David, do you perceive blockchain technology to be an important disruptor in banking today, despite the fact that we hear from some commentators that they predict it'll be at least 8 to 10 years before we see any implementation of blockchain in mainstream banking?
I do feel very strongly that it's going to be a very disruptive technology. So it's a very complex technology that delivers something very, very simple, and that's trust. And it's trust in the data that is available on the blockchain for anybody who's given permission to actually access that data. And although I think it may well be 8 to 10 years before some banks really take advantage of the technology in what it can do for certain of their processes, or extend their existing business models, or even create new business models for them, what we're actually seeing today is other players are actually adopting and using this technology now and have been working with it for some years. So people like Santander have come out publicly to say that the work they've been doing with Ripple, they're now testing this, or an application they've developed today for cross-border, cross-currency payments. And then you have fintechs like Settle, who have their own proprietary solution based on a blockchain for the settlement, the payments and settlements process. So they are taking it to market today and looking for new customers. And given the background of the people behind Settle, who I have met, but although I haven't actually looked at the solution itself, I'm very excited about what they're doing, particularly in the settlement space, and that's taking place today. So that's why I believe it's going to be a very, very disruptive technology, and it will reward those who are embracing the technology and using it today. And those who lag behind may well find they are left behind as other players, both the banks and new players coming into the market, really take advantage of this new disruptive technology.
So David, you mentioned IoT in banking during the discussion. What is it about IoT that excites you? Be interested to understand perspectives on that.
Yes, well, I used to struggle with IoT in banking because IoT is all about taking information from the physical world and then turn it into a digital output. And given that in banking, most, if not all of banking now very much is in a digital format, there didn't seem to be a place or a role for IoT to play. Now, if you contrast that with the insurance industry, where lots of things, lots of risks are being covered in the physical world, it's a very different story. However, if you take a subset of Internet of Things, being the Internet of moving things, then it brings into play a lot of different things. And I talked during the webinar about a 40-foot shipping container. But it can also bring into play things like precision farming that we're seeing out in California, whereby, for example, hedge funds who typically take a position in commodities on the open market, it could give them the opportunity to actually track the growth of a particular crop, such as wheat, from seeding based on information they can gather about rainfall, around temperature, around any pestilence or anything that may be around. And maybe even build a different business model whereby they take a position in wheat by buying it at source from the farmers direct and then paying them as the crop is seeded and then fertilized and then grows and then harvested in different stages. So that's where the Internet of Things really comes into play, the Internet of moving things, supporting really things, really physical automation, then coupled with blockchain and cryptocurrencies, which is sort of financial automation. I think this is going to lead really towards what I call economic automation. We're going to see very different business models now in banking and in other industries taking advantage of these very disruptive new technologies, coupled with other technologies as well.
That's really insightful. So we are today living in an age where the customer can benefit from what one can coin as a phrase, the digital sixth sense. How should banks look at delivering this? And what type of engagement models do we see? And how can banks personalize this experience? So that's a question to David.
Yes, it's very much a sixth sense for all of us. We're all exposed to the digital world today with our mobiles, with the way we operate, with the way we interact with our friends and colleagues on social media. So it's an opportunity for the banks to really change the way that they interact with the customer and take advantage of this digital sense. So it's about now helping the customer more, providing assistance where required. It's about being ahead of the customer and predicting when they will need help with a product or with advice about a product. And also having the systems, the product factories in place to be able to create new products to satisfy a customer around a particular need that they may have. And certainly if a number of them have the same need, be able to launch a new product very, very quickly into the marketplace and then promote it through social media as a new channel to actually reach out to customers, to the younger generation in particular, and have a dialogue with them.
Great. And Rakesh, what's your view on the digital sixth sense? What are you seeing with customers?
Yeah, I think there is change happening on a number of fronts, right? So if you look at the products itself, what we're moving towards is virtual products and services. We're coming to a point where we probably not have any ATMs, debit cards, or credit cards, right? it's quite possible that cash withdrawals and deposits could be possible with the NFC-enabled retailers. So on one side, there's going to be a significant change in the products and services that are offered by the bank. On the other side, what we're also looking at, as David indicated, is a shift in customer experience. Banks are beginning to be reframed as fun these days, right? They're experimenting with new layouts for their branches. They're focusing significantly on making the user experience relevant and engaging in a number of ways. They're looking at the use of social media. Consumer social behavior is evaluated in order to assess pricing and risk decisions for the bank. And in addition, there's a lot of information that the bank is collecting with respect to the customers in order to profile the customers from a behavioral perspective and help them achieve their financial goals. So these are some of the changes that we are going to see in the bank's relationships with the customers.
Great. So, and final question to round up is, what role does mobile have to play, and how is this being shaped by the need to become more personally engaged with the customer experience side? That's a question to David.
So mobile, as predicted, and the banks already know this, of course, is now the dominant channel for customers to actually interact with their bank. And this really is about putting yourself in their shoes. How do they want to consume your products? How do they want to receive information from the bank, find out information about their accounts? It's an absolutely critical device now in banking. But it's also a very, it's an ideal device in a way, because it's always with the customer. And if the banks can create ways of adding value to their relationship by predicting problems, by being there to solve problems, by push alerts around what's happening to a customer's accounts with more advanced personal financial management applications, then really it is a very, very valuable tool for the banks to interact with their customers. And of course, the mobile phone is always on and always with you. Some of the challenges it raises, of course, then, is around the security of the device. But already, investigation and analysis is going into how you actually authenticate that the customer who owns the device is actually the one using it at the moment, from the way that they actually swipe on the screen, from various biometrics you'll be able to pick up from the mobile phone. So really that the phone is always ready and with the customer, unless suddenly it changes its pattern. That's another way of actually adding security into the mobile device. And it's worth remembering that the older generation, who may well be very savvy and comfortable using online banking, still consider the mobile phone to be actually very, very insecure. So they wouldn't do anything on the mobile phone. You contrast that with my own children, the millennial generation. They do absolutely everything that they want to do on the mobile phone, which of course is pushing the envelope for the mobile phone providers as well.
Well, thank you, everybody, to the panel and to David and Rakesh for today's webcast. It's been most insightful, and I'm sure everyone will agree we've had a significant impact there in terms of learnings. What I would like to say, we will be circulating a link to a post-event microsite, which we are effectively going to be adding more content in the lead up to Cybos, where Dell will be present. So we very much encourage you after this webcast to read the follow-up email, which will have a link to this microsite. So once again, thank you very much for your time, and we'll look forward to the next webcast. Thank you. Bye-bye.